Hi, everyone, and welcome to UBS Trending. I'm Anthony Pastore. So over the last 2 years, there have been some unprecedented moves within the energy space. And looking specifically at MLPs, particularly in the last decade, they built out the assets necessary to transport, store, process, and export energy, which led to large capital expenditures and, of course, large borrowings. As an investment, where does that leave MLPs today? So joining me for this discussion, someone from the credit side and somebody from the equity side. We've got Alina Gallant and Jay Dobson, both from the Chief Investment Office. So nice to have you both here in the studio, or Alina for virtually joining us in the studio. Good to see both of you.
Thanks for having us, Anthony.
Sure thing. Alina, let me start with you, because you cover the credit side of MLPs, and you recently initiated coverage. So from this perspective, I wanted to ask you, what's really been happening with the sector? Of course, we have the pandemic. And as I mentioned in the intro, you've got capital expenditures that you're keeping an eye on. Plus, we've got these projects that started post-financial crisis that are starting to come to a close. So given all that, what are some of the themes that fixed income investors really need to know about right now?
Thanks for having us on, Anthony. So it's actually important to understand what's been happening with MLPs over the past few years, right? As you mentioned, we went through this large oil production growth phase in this country, and that required a lot of infrastructure. And of course, MLPs seized the opportunity and they built out the infrastructure, but that required a lot of investments. And so, especially since MLPs pay a very high portion of their free cash flow as distributions, basically led to a lot of borrowings and ballooning balance sheets. MLPs were frequent issuers in the bond market, and that left them very highly levered. So then, of course, we had volatile commodity prices. And you also had investors really start to focus on the ESG side of things, and they started to question the longevity of the sector in general. And then we had 2020, and the pandemic sent demand for oil and for fossil fuels down. So MLPs really had to do something. So what did they do? Well, they began to focus on their balance sheets, and they cut growth CapEx, and they cut their distributions. And they began to generate free cash flow, and they used it to pay down debt. So to put that into perspective, the universe of companies that we initiated coverage on, they cut their growth CapEx by about 60% from 2019 to 2021. And 2022 is actually expected to be even lower than that. Distributions were cut by about 40%. And they generated material billions of dollars of free cash flow, and they used it to pay down debt. So that brings me to today. And what's important to note for today is that MLPs are actually now towards the tail end of this deleveraging. They've been in the situation for close to 2 years now, and a lot of these companies are approaching their target leverage metrics. So what that really means going forward is that most of the free cash flow is now going to be going towards the unit holders as opposed to credit investors. And so that brings me down to the two key themes for credit investors. Number one, we suggest that credit investors still look for those MLPs that are focusing on debt reduction. And I know that I said that overall the sector is approaching their target leverage and towards the tail end of this deleveraging. There are still those companies that are focusing on deleveraging, that are focusing on their balance sheet. And that is the best place to be from a bondholder standpoint. And then secondly, ratings upgrades. All of this credit improvement is going to lead to ratings upgrades. And so companies that could get upgraded from high yield to investment grade, for example, those bonds will offer the best opportunities from a return standpoint for credit investors.
Terrific, Alina. Thank you. And let me ask you, Jay, because as Alina is saying, there's now this general ratings stability from the credit side. What about on the equity side for stockholders of MLPs? What does that look like? We can't ignore the fact that we have this huge rise in commodity prices on the energy side. And of course, we're seeing, as Alina was alluding to, CapEx is starting to slow down a little bit. Where do you see the equity side sitting today?
Yeah, I mean, it's interesting, Anthony. If you sort of go up to 30,000 feet, we look at the broad energy space. We have a pretty optimistic view, quite frankly. That's, sort of supported by our view of commodity prices, continuing to be stable to improving from here based on improving demand. And then, as Alina was alluding to, capital discipline, to put sort of a name on it. These companies across the energy space are controlling CapEx and using free cash flow to improve balance sheets where it's necessary. And as Alina was saying, a lot of that is behind the sector. So with still controlled capital spending, you've got a lot of opportunity to hand lots of capital back to shareholders. Now, when we look specifically at the MLP and energy infrastructure space, we see these same dynamics. As Alina said, a lot of the capital spending that was necessary for the U.S. supply side, is behind us. So these companies are generating significant free cash flow, have balance sheets that are much more in line with the way these companies should look as investment-grade entities, and hence now have the opportunities to grow distributions and buy back shares. So I think there's a lot of opportunity here. What I think is important to recognize is we can't really divorce MLPs and energy infrastructure from the energy business. What you really have to think of MLPs as is service companies to the energy space. They operate under long-term contracts, so they're different than oil field services, but they're service companies. So they're going to have some relation to the energy business, but the reality is we have a pretty optimistic view of overall energy, so I think the outlook for MLP equities is certainly constructive looking into 2022.
Right, and and interestingly, you look at the shale revolution that took place in the United States right after the financial crisis, and it led to oil production increase of 137%. So, Alina, given all that, when you think about you talked about the credit improvement, is that already priced in here? And if not, what are some of the best vehicles for investors?
Whether the credit improvement is priced in is really situation dependent, to be honest. Let me give you an example. There are some MLP high yield bonds that are widely expected to be upgraded to investment grade. And for those bonds, the market is already pricing that in. The spread on those bonds is trading at or very close to the spreads on the comparable investment grade bonds. So for those situations, it really is priced in. On the other hand, though, you do have high yield MLP companies that could get upgraded to investment grade, but maybe it's not imminent. Maybe it is, let's say, 12 months down the line. And if you look at spreads on those bonds, that's actually not yet pricing in all of the potential credit improvement that we can still see over these next 12 months. So from a bondholder standpoint, investing in those companies that have the credit improvement and that have the potential to be upgraded, but maybe it's not as imminent as some of the other companies, that can still offer opportunities. The other thing that I'll mention is MLP preferreds. The MLP preferred space is still offering substantial yield. Actually, MLPs are some of the widest preferreds that we still have outstanding. And so this could be a really interesting way to invest in the MLP space, from a credit side and still have the wide yield and, opportunity for enhanced total return. So to summarize, whether credit improvement is priced in is really situation dependent, but we do think that there still are some opportunities on the bond side and opportunities on the preferred side in the space.
Terrific. Thank you, Alina. Jay, I wanted to ask you, obviously everything comes with risk, and there certainly seem to be some risks floating around midstreams right now, particularly when it comes to taxes. I mean, a lot of the reason why folks get into investing in MLPs is because of the tax benefits. So what are some of the risks that you see potentially in the MLP space on the equity side for investors?
Yeah, I want to talk about risks, but I want to pick up on one thing that Alina said, Anthony, yield. I think investors, and we should have a whole other segment on this, on yield opportunities in energy. The upstream's delivering yield, the MLPs are delivering yield, as Alina pointed out, the preferreds. So I think there's a lot of opportunities, and obviously in a low interest rate environment, investors are looking for yield. They should be looking risk-adjusted at energy for yield. Now to your question, and I just mentioned it, risk. Look, I think in the near term, it's Omicron, it's COVID, it's the demand elements associated with the pandemic. I would tell you that we're looking at the developing world carefully. I'm cautiously optimistic that those risks are fading. So then we get to, sort of the more intermediate term risks. It's going to be around, production, capital discipline, and essentially what these companies are doing, which is delivering capital back to shareholders, all the while maintaining their balance sheet.
Right, because there's some excess cash flow in some of these companies, correct?
Yeah, absolutely. And it's what we're going to do with that cash flow. They still have to keep the balance sheet strong, as Lena pointed out, but with a lot of that done, a lot of that value can go back to shareholders. I think in the intermediate term, the question will be, what more infrastructure do we need? I mean, here in the U.S., we're going to need a couple more gas pipelines just to evacuate gas, particularly if we're not going to flare gas at the wellhead. We're going to need some more gas pipeline infrastructure over the next 2 years, but I don't see big increases in CapEx. I just do think that ultimately, maybe it's 23, you'll see, CapEx starting to tick up a little bit. Longer term, certainly any discussion around energy would be incomplete without talking about energy transition. But I would say, and we could have a whole other segment on this as well, I would say in summary, there's at least as much opportunity for the energy business in energy transition as there is, obvious risk of lower use of fossil
MLPs
fuels.
can play a role in that transition, right, Jay? Especially this transition to clean energy.
Yeah, absolutely. Pipelines for hydrogen, pipelines for carbon dioxide, if that's going to be captured and sequestered, which in my mind, it's hard to imagine the energy transition without that. And ultimately, more uses of natural gas. Natural gas is one of the cleaner fossil fuels, so though it's become a little bit like the next coal, I would argue there's a lot of opportunity to reduce greenhouse gas emissions, because that really is the goal by using more gas and displacing other fossil fuels.
Terrific. Yeah, there's definitely a bigger ongoing discussion here. And I know, Jay, we've had you on a few times to discuss the energy transition with our colleague, Michelle at Liberty. We'll do that again.
Yeah.
Alina, thank you for coming on and talking about this. I know you just initiated coverage here on MLP credits, so I know we'll have you back to talk more about it. So good to see both of you. Thanks for joining me.
No, thank you, Anthony.
Thank you so much.
Thank you. And for more information on anything we talked about today, you can check out information from the Chief Investment Office on our website, ubs.com/views. And make sure to follow us in general on social media. We're on all kinds of platforms, LinkedIn, Facebook, Instagram, and Twitter. Plus, you can check out all of our past UBS Trending episodes on demand on our website, ubs.com/studios, or on YouTube. And make sure, if you have any questions about how this might impact your own portfolio, to speak with your financial advisor. For now, I'm Anthony Pastore. Have a great day, everyone, and remember to keep your eyes on what's trending. We will see you soon.